More people could soon be feeling an economic squeeze. The Federal Reserve set to begin raising interest rates in March.
And that means paying more for certain loans. CBS News' Jessica Moore has the advice from the experts.
With inflation at a nearly 40-year high and ongoing concerns about the pandemic and supply chain shortages, the feds are now stepping in.
We're prepared to use our tools to assure that higher inflation does not become entrenched.
One of those tools is raising the prime interest rate, currently lowered to essentially zero to help aid during the pandemic. The first quarter-point raise could come as soon as March.
The good news is that a number of things are happening in the economy. Higher wages, kind of that wage growth is helping to drive consumption. Raising interest rates means everything from mortgage rates to credit card rates to auto loan rates are all going to go up.
In an interview on CBS Mornings, financial analyst Jill Schlesinger says this year could be a doozy for millions of Americans.
It really impacts all of us. If you are a saver, you're totally psyched because you're saying, hey, I'm going to get paid more interest on my savings, my checking, my money market, my CDs. But if you are a borrower, things could start costing more. Not all borrowers, but if you've got a credit card balance, if you've got maybe a business loan or a variable home loan, those payments will start to increase as soon as March.
Schlesinger says she expects the Fed to raise interest rates up to 5 times this year and warns people to start preparing for the squeeze now.
Pay off any of those variable loans as quickly as you can.
Really?
Don't deplete all of your emergency savings, but get a jump on this. This is going to be something that's with us throughout this year and next, so pay down those loans.
Americans are frustrated by the growing cost of everything from gas to groceries, with analysts estimating most families are paying $250 more every month to buy the same amount of things they were a year ago.
You go to the grocery store and you reach for something and you go, my goodness, this is much more than I used to pay for.
Is this just going to make life harder for normal people?
It is going to make life harder for normal people because they're not only going to pay more for food and gas and rent and health care and all kinds of other things, but now the cost of their loans is going to be going up as well.
By making loans gradually costlier, the Fed hopes to stem the surging price increases that have squeezed many Americans and encourage them to save rather than spend. Jessica Moore, CBS 2 News.
I'm not ready for this.
No, no.
Too much.
It's enough. It's too much.